sticking on just kind of national market fundamentals, and again, the theme of a lot of these reports are they're national reports, and there's a
Yeah.
lot of like local nuance. Here, I'm going to switch here. Um, is there was CoStar came out with, well, technically it was apartments.com, which is wholly owned by CoStar Group, came out with a report for August for their multifamily rent growth report. And essentially, U.S. apartment rents declined in August, with the national rent falling to 1713, a 0.23% decrease from July's revised rent of 1719. Now, if you're a Gray Report newsletter subscriber, you probably also saw the Yardi report, which showed a slightly smaller decline in August. It was like $1 on average. They're showing basically like a $6 on average decrease. You could say that it's flat, but the fact that we're in August, which is typically the period where you start seeing rents like slow down, but very rarely do rents go negative in August in the summer. Typically, like the only time we see negative rent growth, at least on a national basis, is like December and January.
Yeah. So maybe as an indicator for the rest of the year, kind of question mark.
Yeah, I
If
mean,
it's already coming this
if
early.
it's already flat,
Right.
and then so it's, and we talked about this on the show last week with Jay, trying to really understand what this is. Is it, how much of it is it economic uncertainty, people just not wanting to make a decision? How much of it is just the perception that rents are high elsewhere, so I want to stay put because our renewal rates are very high, and then how much of it is just the new competition?
Yeah.
We've just brought on a ton of new supply, so there's just a lot of new competition.
Yeah.
And they're that overhang of owners lowering rents to solve for occupancy, giving concessions, giving deals, and that's all just trickling down to just a softer market.
Right. I think that's the hardest thing with everything right now is you don't have one answer that it kind of explains everything.
Yeah.
It's like all of these different factors weigh in, and they all weigh in at different weights or amounts, and it all kind of contributes to whatever we're seeing here, slight decreases, but at different times in the year they might be moving. Now this is contributing more. Now interest rates are contributing more. Now supply is contributing more to the overall picture. And it's like, it's pretty dynamic, and it's kind of, it makes it difficult from like an LP standpoint, I think, to kind of make sense of, I don't know if it's super helpful to kind of make sense of the national market.
Yeah.
At least for our standpoint.
I usually tend to agree, but then there are some things that there's trends that are national, again, because we've seen like the slowdown. Like we still have positive rent growth in our portfolio.
Yeah.
I mean, I think like we're growing rents by just below 6% on average.
Yeah.
But still, when I look at lease traffic, our lease traffic is way down this summer. And it wasn't just August. It was really kind of like June, July, and August. I mean, we signed a third of the leases in August than we did in May. So like we should be signing less leases in August than May, but it shouldn't necessarily be a third.
Right.
And that lines up, our portfolio, call it the anecdote, but that lines up with a lot of the national numbers that we're seeing.
Right.
And so that tells me maybe it's something more than just like our local dynamics.
Right.
And is there some psychology that is, having renters not want to go out and sign a new lease, just not want to take that action? And it's kind of a similar scenario that we experienced back in, really kind of 2022 and 2023 when interest rates started to be rising.
Right.
And it created just so much uncertainty.
Right.
People just didn't want to make
Decisions.
large economic decisions because they didn't want to get hurt by it.
Right.
That's the only thing I guess I can think of. But it's also strange to think of like a renter being like, I'm not going to rent an apartment because of the tariffs.
Yeah. Yeah. I don't know. I wonder if just people like just want to move less in general. Maybe everyone's made their moves from like the COVID pandemic, and they're like, this is, where I'm at now. I don't need to move anymore. Or I don't know. That would more so be, people moving from like California to Florida or something, not like within a small market, Indy to Greenwood or something.
Yeah.
But I don't know. It's interesting.
On the topic of uncertainty, and we're going to get into this later, what are investors, where are they in, in the realm of uncertainty? I mean, clearly there's enough that are able to make decisions. We just completed the capital raise. We're finishing up a capital raise. So there's enough confidence in the market, but were our investors confident when you're talking to them, or are they unsure?
Again, it's a complete mixed bag. There are some investors that, look at our deal and they're like on their, we've had two investors say that they've had more capital calls than they've had distributions this year,
Wow.
but they invested in our deal. So some are like, I don't, not to say used to it, but like kind of either written some other investments down to zero, have kind of moved on with it. Others are just in a really good spot and like picked really good deals from 2021 and picked really good markets and did, maybe fewer deals, but a lot of due diligence on the sponsors. And they're like kind of like completely bypassing all the stuff that's happening in Texas or, a lot of the other markets where there's a lot of headwinds and negative rent growth, and they're not really even feeling it in their own portfolios.
Yeah.
And it's a total mixed bag. In general, if I do try to paint with a broad brush, it's harder to raise equity because other deals aren't doing as well. And so people are like, I've gotten 24% in the S&P 500 or whatever the last 2 years.
Yeah.
And the two deals that I invested in real estate in Texas are both not distributing.
Yeah.
Like I'm done with this for a while.
Yeah.
That kind of thing. That's definitely there. That's not everybody. In general, what are they looking for? After going through a lot of this, I think the number one thing that they're looking for is like day one yield without like a huge lift. It's like a smaller margin from what the property is currently doing to what you're saying you can make it do, making that delta more narrow and reasonable assumptions.
So less speculation.
Yeah, less speculation by far.
Yeah, kind of a simple business plan, something you can quantify. You don't need a lot of different variables to go right.
How certain am I that you can give me 6% cash on cash or 7% cash on cash? And they're not as focused on total return.
Yeah. And you have seen that more focus on cash yield rather than IRR.
Definitely.
Yeah. What are we're jumping ahead a little bit, but what kind of cash on cash people look for, you think, today?
I think over like a 7-year period or a 5-year period, 7% cash on cash is really like the number that investors want to see.
Yeah.
And one of the most challenging things from this capital raise, at least from my seat, is I don't want to, again, painting with a broad brush, but some investors don't weight the cash on cash or IRRs relative to the risk. And I think it's kind of interesting on the past 3 deals that we've done, River Club, Solana, and Flats, they're kind of stepping down a little bit in risk.
Yeah.
And, some investors want heavy value adds and want to go for an 18, 19, 20 IRR. Some want to do flats and want, 7% cash on cash with reasonable assumptions and don't want a huge lift. And, every deal that we do isn't going to be perfect for what everyone's looking for. And I think that's okay. It's just like presenting why we think this one is such a good deal. And it is because of like, it's a lower lift.
Yeah.
If that makes sense.
Yeah.
So.
All right, I'm going to ask you about all of that here in just a second. I'm going to ask you about flats. I'm going to ask you about Solana. And I'm going to ask you about River Club. Those are the last 3 deals that we did.